out. Spotify is on that list. The stock is down 5%. Earnings out this morning saw the company's monthly active user growth beat expectations. Gross margins dipping slightly. This comes a day after the company announced price hikes across all 4 tiers of its premium subscription service. Alexandra Canal is here with more. My husband this morning sent me the screenshot from his Spotify when he opened it up. I guess I didn't give him the heads up when I knew about that story yesterday. I said, yes, I know. The stock fell yesterday because they did this.
Yeah, and investors seem to be concerned that the price hikes are going to impact subscriber growth, which we have seen has been strong for Spotify. And shares this morning have been on a wild ride since those earnings were released. We saw shares down as much as 12% early this morning. And then they seem to recover somewhat. It's down 6% right now, but there are a few misses that I think is worth noting here. One being that losses widened even further. We had revenue missing estimates due to higher costs and some foreign exchange headwinds. Gross margins, as you mentioned, ticking down. Gross margins, that's been a very important metric for investors when it comes to profitability. So a disappointment there. Free cash flow remained positive, but was also down both sequentially and year over year. And you know, these higher costs are due to a variety of factors, one being how royalty costs have continued to balloon. Spotify also cited losses from cuts in its podcast division. So these are things that are going to play out over the long term. And then in the background of all of this, we have those higher prices, which, as I mentioned, is a bit concerning to investors when they weigh how much pricing power Spotify has in this market. But CFO Paul Vogel did say on the call that the data would suggest historical price increases have had minimal impact on growth, but that they are going to be a bit more conservative moving forward.
What's disappointing here? Here's a company that blew away the net ads estimates, 36 million. I mean, that was a huge number.
Yes.
So they have 551 million total monthly active users and only produced $9 million in free cash flow. Operating loss, $112 million in the most recent quarter. Awful. Which raises the question, is this a company now that has to get more aggressive in cutting costs? You can get lost on podcasts on Spotify. You don't even know where you find half of the stuff. Do they have just too much content?
Yeah, and that's a big area of concern. They have been trimming their podcast unit. They've parted ways with Prince Harry and Meghan Markle, which was a really big contract there. They're trying to be more strategic in who they partner with, but podcast still remains an important area of growth for this company. They did lay off a significant amount of folks in that podcast unit. They cut about 6% of their total workforce earlier this year. So I do think there's more to be done, especially considering these results. But Steve Keyhall from Wells Fargo this morning said that he's bullish over the long term, that investors just have to remain patient, that these price increases are going to help gross margins over time. So that's the
You were a fan of the Harry podcast, weren't you?
Oh, please. No. I was going to say, Soz, if you recall,
okay.
I hate to say I told you so, or not told you so, because you weren't arguing against it necessarily, but when they made that big initial push into podcasts and poured so much money into it, I was like, what are they doing? There's so many podcasts. What is their ROI on just saturating the market?
You can't watch. What, are you going to put one AirPod in this year and another one listen to the Obama podcast?
Well, you got to listen
Harry,
to it 1.5 times.
And then listen to it on a speakerphone? No, it's crazy. But they probably have too much content. At what point do they start to, I think, find that Jesus moment where they focus more on profits than trying to drive subscribers?
And I think we're at that point. As you can see with the share price, investors don't have the patience. And I think if we don't see improvement on the cost side through the back half of this year, that's going to be a problem for this company. But they did say 2023 is when they're going to start to improve some of those profitability metrics. But so far,
But the stock has doubled this year.
Yeah. It is. It's still up.
Because everybody thinks that they're going to raise prices like they just did for $1 and they're going to turn profitable. This report suggests that thesis is completely wrong.
We'll see.
I don't know. It'll be a bumpy back half of the year for Spotify, which, you know, we've been used to with this company. It's up, it's down, it's everywhere. So wild ride to be had.
Alexandra Canal, thanks so much.